There have been 52 quarterly earnings reports in Tesla's history since its IPO in June 2010. How many of those can you point to and remember today? Probably not many, and this quarter will be no different. Don't misunderstand me, I love the quarterly reports, getting a peek behind the curtain of the business, getting an update on how things are trending, getting to hear the team talk about the business. But I feel like I need to be a voice toning down the importance of quarterly results, especially when it comes to metrics like margins, operating cash flow, ASPs, and the like. As a long-term investor, these numbers are going to fluctuate, and taking a screenshot in time of the business and projecting that into the future for a company like Tesla is a fool's errand. With that disclaimer out there, I do have a few thoughts I'd like to share. First, I have to say it, the questions that are asked, mostly by Wall Street, are flat out painful and a waste of time most of the time. How many times do we need to ask about Tesla's pricing and margin strategy? Hint, hint, fellas, it's the same it's been now for years. Adjust the pricing as needed to continually grow production and delivery numbers, so whatever interest rates and consumer demand dictates, that's what it will be. And yes, Tesla is willing to let margins go lower if need be. On the flip side, how about the questions that were not asked? Nothing about Project Highland, the Giga Berlin expansion, 4680 production in Berlin, no update on Giga Mexico, etc. After a number of years of going through this, it's just frustrating, and I'm sure a lot of you would agree. Elon also seemed to be in a great mood. He was willing to share and explain things, he was joking around a lot and laughing on a majority of his responses. I know some people may perceive the team's demeanor as being arrogant, but personally, I view it more as a surety of proper execution in controlling the controllable. Tesla understands certain things that cause those metrics we talked about to fluctuate are out of their hands. Interest rates, consumer sentiment, disposable income, competition, or lack thereof. But Elon and co. understand their position of strength from a decade plus of innovation and execution, and they're now at a point where the business is not in jeopardy. Now the question is not if Tesla will grow, it's just how fast. Hearing Elon laugh and joke to me is a good sign he's pleased with how things are progressing across the business. There's also a point I hear many people make all the time. It goes something like this. XYZ is a drag on Tesla's margins right now. That thing could be Cybertruck production, Berlin and Austin ramping, 4680 production, Dojo Optimus, etc. Listen, this is going to be the case for the next decade plus. These drags or margin headwinds are going to be a permanent part of Tesla's business for as long as they're trying to grow 50% per year. New factories, new car models, new ramp schedules, new battery factories, new neural net training hardware. This is part of why I say the focus on quarterly snapshots is silly. The spending before any revenue is recognized is going to be a part of Tesla's business going forward. Some people talk like it's going away soon, and really that could not be further from the truth. So as new opportunities and global incentives arise, Tesla will speed up or maybe other times decelerate its growth spending, but this is a normal business operation. And to the crowd out there that may have come away from the call disappointed, I'll grant you, there are times when Elon could answer questions more directly, like the Cybertruck question. The question was about the specs, pricing, and delivery timelines, but instead Elon went on a rant about demand being off the hook. Then he talked about the production ramp going as fast as the slowest part of the supply chain. At this point, it's like, please, just give us a date when you'll announce the pricing and specs of the truck. That's what people want, so I understand your frustration. In fairness, an earnings call is not the place to talk about pricing and specs and new products, but given that fact, how about we have the moderator remove those questions that will not be directly answered? I find it simultaneously comical and sad that the analysts and mainstream media reaction yet again is super bearish, and no one at all seems to be talking about the 4680 progress at Giga Texas. 80% production increase quarter over quarter and a 25% reduction in COGS due to improved cell yields. That's huge alone. And then we learned that the Cyber cell is 10% higher energy density, making it comparable to a 2170 cell. If Wall Street wants higher margins for Tesla in the future, it's investments like this right now that need to happen, but it takes time to play out. A car company has made over 10 million battery cells completely in-house at one factory. That's not too bad. Tesla always talks about the importance of data. And speaking of that data, do you guys remember a time when being a private citizen was still a thing? What changed? The internet. Think about everything you've ever searched for, every video you've ever watched, every tweet you've ever composed. All of that data being collected, scraped, aggregated, and compiled into a public record that these data brokers then go ahead and sell. Many people still don't know this industry exists and how big it really is. That's just part of why years later I'm still using Surfshark VPN, the sponsor of this video, to take my privacy back and to protect my personal data. One of those data points is your IP address, and data harvesters use it to identify you and your location. But with Surfshark VPN, you can mask your IP address and it will reroute your connection through an encrypted server to make it more difficult for these third parties to find you. It may sound complicated, but really it could not be any easier. Surfshark's interface is super straightforward, beginner friendly, one click, and in a matter of seconds, your protection will be live. Surfshark can do much more than just give you your privacy back. It can also help you find better deals on flights and hotels, a feature that Ashley and I are using right now for later this year. So if you want privacy, peace of mind, all of those features, and to support the channel, you can check out surfshark.deals/electrified, linked below. You can use my code electrified to get 3 months for free. They also offer a 30-day money-back guarantee, so there's quite literally zero risk to you. Thank you in advance. One point I really want to drive home is about Tesla Energy. I've scoured the web and most of the analyst and media reactions today don't mention Tesla Energy at all. The energy division is now up to 18.4% gross margin, up from 11% in Q1 on lower revenues and lower megawatt hour deployments quarter over quarter. This is incredible news. This also means that in a future quarter, whether it's Q3, 4, or 1 next year, there's going to be a big volume spike in deployments, which will most likely send Tesla Energy margins over 20%, higher than the car business right now. On lower megawatt hour volume deployments this quarter, Tesla made $278 million in profit from Tesla Energy. Annualized, that's $1.1 billion in profit. Tesla's storage deployed on a down quarter due to timing of contracts was still up 222% year over year. 5 times the growth of Tesla's auto business, yet not a single headline about it. And this isn't just a few hundred megawatt hours we're talking about coming from some super small base. We're talking now around 3 to 4 gigawatt hours per quarter being deployed this year. I've said it before, I'll say it again, Tesla Energy should not be an afterthought anymore. And if analysts come out with reactions and don't even mention Tesla Energy, you have to wonder, what are they really doing? On the FSD licensing, my guess is Ford. It's great news, but most of us have seen it coming for a while. The bigger story is what this will signify to the markets when it actually happens. Not only is Tesla superior with the charging infrastructure, but next it's going to be a sentiment shift that Tesla is far superior with autonomous capability, and this will be tangible evidence of that. Having the competition come to Tesla is an admission that they cannot compete, a waving of the white flag, and eventually the markets will pick up on this. It'll just be later than it should be, as always. And to everyone who's been begging for that FSD transfer, here are the new terms and conditions. Q3 is your time, one time only, so make your plans to upgrade now. This should result in an influx of used Tesla vehicles, so if you're in that market, stay ready. And to everyone that just traded in your car with FSD before this announcement, I'm sorry, that is very unfortunate. I feel for you. I did love to see Tesla's free cash flow reverse positive this quarter. Simply put, after all expenses to grow the business, Tesla still generated over $1 billion this quarter. That increased the war chest to over $23 billion with only $44 million of debt. That's really, really good. And just think for a moment, all of the money Tesla is spending right now on future growth projects, they're earning no money from now. Optimus, Dojo, Cybertruck, next-gen platform, products we don't yet know about. And on Tesla's inventory, I loved what they said to clarify. It's vehicles in transit, test drive vehicles, and display vehicles that account for the majority of total days of supply. Drill this one into your memory bank the next time an article starts trending about Tesla's inventory being a problem. That argument is laughable. When people spew out the Tesla is producing more cars each quarter than they deliver as a bear argument, just know that person, respectfully, is clueless. Speaking of deliveries, Tesla did say they're working on better vehicle finance options. So whether this is more captive financing from Tesla or working in partnership with the big banks, this is a great lever for making Tesla vehicles more affordable, especially in this interest rate environment. Oh, and Tesla's listed production capacity now totals 2.02 million vehicles per year. This one won't be a big deal for Tesla financially, but can we touch on the Optimus parts pairing with Neuralink for amputees? I mean, my goodness, how can we not be excited about things like this? Life-changing technology, potentially, for millions of people could be right around the corner, but people would rather harp on Tesla potentially cutting prices in turbulent times. Give me a break. Another overlooked data point, Tesla services and other line item has now had positive margins for 5 quarters in a row. This is notable because it's historically been a drag on margins for basically Tesla's entire history. At 7.7% margin this quarter, up from 3.8% in quarter 2 last year, this is just another business line for Tesla now making money instead of losing it. This category is Tesla's used vehicle business, supercharging, and non-warranty work, plus some others. There have been some fair questions out there about the repairability of Teslas with GigaCast. I know you've already heard it, but since repetition is the mother of learning, here it is.
And Martin, that's like simply not true. There's a misconception that traditional bodies are easy to repair, but they're made of multiple materials and multiple joining methods. Spot welds and rivets have to be drilled out. Panels and structural adhesive have to be chiseled out. Dried adhesive has to be removed, stampings cut, blah, blah, blah.
It's a crazy patchwork quilt.
Yeah, and so putting that back together means time and money. Using an example of replacing a rear cast rail on a Model Y, to do that versus like what we replaced it with from the Model 3, it's 10 times cheaper and 3 times faster to do it with the cast rail. My design team works with our collision repair team since we're closed loop on this with insurance, and we design specific parts that make it easier and faster to repair. We have an incentive to do that because we have our own insurance and our own body shops. We expect that we'll continue to do this, and collision repair will continue to become cheaper and faster over time. And we already make this available to all body shops through our Tesla-approved body shop training.
Yeah, closing the loop on collision repair and factoring that into design is a big deal.
It's crucial. I don't think anyone else can do it with the ecosystem that we have. So.
Yeah, and we are actually able to change the details of the casting with inserts. And we actually do that all the time. So because the inserts actually wear out and need to be replaced anyway, so we can actually make design changes to the inserts and tweak the castings. But the casting, basically, a cast rear body or front body is lighter, cheaper, better for noise, vibration, harshness, much easier to manufacture, and it's better in every way. And that's why so many other car companies are copying us.
I could of course go on, but to land the plane, what did we learn? Tesla is aggressively investing in future growth. The key unlock for Tesla, 4680 production and autonomy, are both making great progress. Tesla is still finding ways to drive costs down in tandem with commodity prices coming down, resulting in a greater COGS decrease than the average selling price decline from price cuts. And even after all of the spending on growth on all of the startups inside Tesla, they still generated over $1 billion in free cash flow in a very challenging macro environment. Yet, some things never change. JP Morgan's reaction is to put out a $120 Tesla stock price target. Why is Tesla stock down? Who knows? But what I do know is this. It's like those manic depressive folks standing outside of a house shouting out different values every second while nothing at all is changing with the house, like Elon said. But in the case of Tesla, the house is actually continually improving and laying the groundwork for profitable, accelerated growth for years to come. Just like the last 52 quarterly earnings reports for Tesla, this one will fade into the background in the history books and mostly be forgotten. But every quarter, without fail, we get to watch analysts and the media overreact with unbelievable short-sightedness. As I like to say, the longer they underestimate, the more we can actually make. Some things never change, and with the right perspective, that's okay.